Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate speak. Today we're diving into Quanterix's amended S4 filing, and let me tell you, this report is about a proposed merger, but the financial figures and legal jargon might need a little decoding before you start seeing dollar signs. We're looking at an amended filing dated March 28, 2025, concerning Quanterix's proposed merger with Akoya Biosciences. Quanterix is trying to get its shareholders on board to issue stock for this merger. At the same time, Akoya needs its shareholders on board to issue stock for this merger. At the same time, Akoya needs its shareholders to agree to the deal too. It's a stock-for-stock swap, but will it be a good deal? Let's dig in. The core of the matter, Quanterix, Akoya, and a subsidiary called Wellfleet Merger Sub have a deal. Merger Sub will disappear into Akoya. Akoya becomes a Quanterix's fully owned sidekick. Akoya stockholders won't be getting cash, but instead stock of Right 318 shares of Quanterix, 318 shares of Quanterix for every Akoya share they own. Based on share counts from March 25, 2025, if this deal goes through, current Quanterix stockholders will own about 71% of the new Quanterix, while former Akoya holders get 29%. Both sides are telling their investors to vote yes. Quanterix's board thinks issuing the shares is a good move, and Akoya's board is all for merging. So how do you as an investor get involved? There are special meetings for both Quanterix and Akoya stockholders where you can vote online or by proxy. Quanterix got advice from Goldman Sachs, who said the exchange rate was fair from a financial point of view on January 9, 2025. Akoya, meanwhile, used Perella Weinberg partners who agreed that Akoya shareholders are also getting a fair deal as of the same date. Remember, these opinions are a snapshot in time. The world has changed a little bit since then. Now comes the forward-looking information. These are just estimates of how the combined company could perform. Management hopes for $40 million in cost savings each year. This is not promised. Before this merger can happen, regulators need to give the okay. The waiting period under the Hart-Scott-Rodino Act must end. Thankfully, that already happened back in February 2025. Even if you sell your shares between the record date and the actual vote, you still get to vote those shares. What could stop this merger? A lot of things. Stockholders could say no, regulators might block it, or a material adverse effect could occur to either company. Here's an often overlooked part. What do the bigwigs get out of this? It's all there in the filing, but no major special interests are present. Okay, so Goldman Sachs thinks the deal is fair, but how did they get there? They looked at financial details, compared Quanterix and Akoya to other companies, and considered future possibilities. Goldman's opinion is not a stock recommendation. The financial forecasts in this document are based on a lot of assumptions that might not happen, so don't take these numbers as gospel. What does Akoya think about the deal? Akoya is telling its shareholders to vote yes to the merger. A big chunk of Akoya's shareholders, almost 57%, already said they're voting for the merger, having signed an agreement to do so. Okay, now let's talk about risks. It's not all sunshine and roses here. There are a bunch of factors that could mess things up. Quanterix has some internal control issues, which could lead to financial misstatements. Translation, it might not be presenting its financial data correctly. Quanterix depends on only one company to build some of its key equipment. What happens if that company can't deliver? Changes in US government policy, including tariffs or cuts to federal research funding, could also hurt Quanterix's business. After the merger, Akoya's stock will disappear, and Akoya stockholders will receive Quanterix shares trading under QTRX. Goldman Sachs, Quanterix's financial advisor, and PWP, Akoya's financial advisor, have their own limitations around this deal, such as potentially working with other companies who may be involved, etc. What's the combined company going to look like? The board will have 9 people, with 7 from Quanterix and only 2 from Akoya, and Tolo and Churam will stay at the top. Akoya's bosses might get special payouts if they lose their jobs after the merger. So is this a good deal or not? It's all about whether Quanterix and Akoya can pull together to generate enough value for all stockholders, and if the key personal and business metrics can be met. Now let's take a step back and look at the bigger picture. This merger is a bold move by Quanterix, aiming to create a dominant player in the combined fields of biomarker detection and spatial biology. The potential synergies are definitely there: a broader product portfolio, expanded markets, and cost savings. But there are challenges. Integrating 2 companies is never easy, and these companies have different strengths. A big risk is the potential for financial forecasts to be overly optimistic, especially in the world of diagnostics. Any delays or regulatory hurdles could cause market confidence in the combined company to drop, leaving Akoya investors with less than bargained for. There's also a lot of power in the hands of the current Quanterix people, with their board and management team dominating, so it's important that they make good decisions for everyone involved. So is it a buy? While this merger is interesting, it's something I would personally hold off on. Thanks for watching, and remember to like, subscribe, and hit that notification bell for more corporate deep dives. And don't forget to let me know in the comments what merger you want me to take apart next.